Scene script. Picture this, a supermarket giant shifting its focus from banking services to its core food business. Today, we delve into Sainsbury's recent announcement to wind down its banking division. To say that this is a surprising move would be an understatement. Sainsbury's, a well-known entity in the banking sector, has decided to step back and focus on what it does best: food. The company has announced a phased withdrawal, a strategic move that won't happen overnight, but rather a gradual process of unwinding its banking services. Sainsbury's Bank has been a familiar name for many, offering a range of services including loans, credit cards and savings accounts. But now, the supermarket giant is looking to shift gears and concentrate on its core business. It's a fascinating turn of events, and one that brings about a wave of questions about the future of banking in supermarkets. But Sainsbury's isn't alone in this unexpected course of action. Tesco, another supermarket behemoth, is also reportedly eyeing a similar move. Rumour has it that big names in banking like HSBC, Barclays and Lloyds are potential bidders for Tesco's banking business. This trend could signal a changing tide in the banking sector, one that could redefine our perception of banking services. So, as we can see, this is a significant shift in the banking landscape. But what does this mean for Sainsbury's customers and the banking sector as a whole? Change is often met with apprehension. So what does this shift mean for the 1.9 million customers of Sainsbury's Bank? Let's delve into the implications. Sainsbury's has assured its customers there will be no immediate changes. This means that for the time being, customers can continue to use their services as usual. Loans, credit cards, savings accounts, these will all remain active. But what about the long term? Sainsbury's has hinted at outsourcing its banking products to other providers, much like it does with its insurance policies and Argos financial services. But what does outsourcing mean for customers? Well, it could result in a shift of operations to an external entity. This might mean new terms and conditions, potentially different service standards, or even changes in pricing. But it could also bring in fresh ideas, better technology and improved services. It's a mixed bag, really. Now let's widen the lens and look at the banking sector. This move by Sainsbury's is not an isolated event. It's part of a larger trend. Traditional banking is undergoing a metamorphosis. More and more banks are re-evaluating their business models, exploring digital avenues and streamlining their services. Tesco, for example, is also reportedly considering selling its banking business. This trend could be a response to the growing competition from digital-first banks and fintech companies, which offer similar services with lower overheads and better customer experiences. The banking sector is evolving, and Sainsbury's move could be seen as a response to these changes. So, where does this leave Sainsbury's in the grand scheme of things? Sainsbury's, a supermarket giant, is now refocusing on its core food business. But what does this shift mean for the company's future? It's a question that's been on the lips of analysts and industry watchers alike. Let's take a step back and see how Sainsbury's has evolved over the years. It all started as a joint venture with the Bank of Scotland back in 1997. Fast forward to 2014, Sainsbury's took full ownership of its banking division, marking a significant milestone in its corporate history. Now, the winds of change are blowing again. Sainsbury's is winding down its banking division, a move that could have potential benefits. By refocusing on its core food business, Sainsbury's is essentially going back to its roots. It's a strategic realignment, a return to the core strengths that made Sainsbury's a household name. It's not just about going back to the basics, though. This move could also free up resources, allowing Sainsbury's to invest in areas that are more closely aligned with its overarching business strategy. And let's not forget the potential for outsourcing. Sainsbury's has already demonstrated its ability to successfully outsource insurance policies and Argos financial services. Could this be a sign of things to come for its banking products? While it's still early days, one thing is clear. Sainsbury's is not afraid to shake things up and adapt to the changing landscape. This shift could be a strategic move, allowing Sainsbury's to focus on strengthening its core business. With Sainsbury's making this strategic shift, it's clear that the banking sector is in a state of flux, We've explored the supermarket's plans for a phased withdrawal from banking, the potential impact on its nearly 2 million customers, and the broader implications for the banking sector. We also delved into how Sainsbury's is positioning itself amidst these changes. It's crucial to keep abreast of these shifts as they have far-reaching effects. Remember, knowledge is power. So stay informed, stay ahead. And don't forget to hit the subscribe button for more insightful updates on the changing landscape of various sectors.